first and foremost, as always, I'm gonna come in here and look at the monthly chart. I do this same routine every single morning. But what I want you guys to do is take notes so you guys can just pick up where you left off the day before every day. Every morning when you guys get up and set your charts up, you can pretty much just pick up where you left off the day before. So on Sunday, Monday, as I said, I come in here and look at the monthly chart. I pretty much zoom out a good little bit so I can see some of these high points. And whenever I mention highs or a high or a low, I'm talking about a swing high, a point on the chart where price completely reverses direction, like right here, right here, right here, 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 here. These are what I'm considering highs or lows. Of course, if it reversed to the downside, it's considered a high. If it reversed to the upside, it's considered a low. Of course, that's just, I guess you have common sense. But this would be considered a swing high, a swing low, a swing high, a swing low. The only difference between these series of highs is this, you always do want to do it in relation to the most recent one. So with this being the low here, whenever you hear that, that means somebody is logged in on two devices and they're close to each other. Whenever you hear that little metal scratching sound. But whenever the only difference in the relationship between these highs is you want to relate them to the most recent high. So this high would be considered a higher high in relation to this high. This high would be considered a higher high in relation to this high. This high would be considered a lower high. This high, lower high. This high, lower high. This high, lower high. Same thing in relation with the lows. A higher low, lower low. Level low or equal low. Lower low, lower low. And of course, in order to identify a trend, you want to see consecutive higher highs or consecutive lower lows. Consecutive higher highs would, of course, identify a uptrend. A series of lower highs identifies the downtrend. That basically makes sense to everybody so far, right? Hello? That makes sense to everybody so far, right? You guys can unmute so I can hear you guys.
Yeah, it makes a lot of sense. Can you hear me?
Yeah, I can hear you now. All right, cool. So that whole basic higher high, lower low trend concept, that makes sense. And what you would do is whenever you identify lower lows or whatnot, you can then draw the trend line like that. Connect the highs or you connect the lows. When you have lows that connect sideways like this, you can pretty much safely say that's a level of support if it's above, resistance if it's below. And you'll know that over time as you draw your support lines, when you do have a series of level lows or something like this, you'll notice that as its support here, here is resistance. So at one point it was support, but then here it's becoming resistance. Okay, now another thing I do see here on this monthly chart is I see my indicator is showing me that this right here is the level of support, the most recent level of monthly support. This level here is currently the level of monthly resistance. So right now we have price between monthly support and monthly resistance on the highest time frame. We also have this RSI down here above 50. Above 50 would symbolize an uptrend, and you would want to sell when you have new highs formed and your RSI is above 70. You would want to buy when you have a new low forming and your RSI is below set below 50 on an uptrend. So it'll be pretty much going in between here. You'll sell when it's up here on a new high, you'll buy when it's here on a new low. Now when it's down here below 50 and between 30, it's in a downtrend, and you do the opposite. But here we're above 50 and we're peaking. We can see here on the RSI it's starting to push down. Here, price is being pushed down off the monthly resistance. So that's what we see taking place here on the monthly. So what we could write on our, if we jotted this down, we could pretty much put on there, we would say on the monthly chart, potential swing high. If you were keeping a journal, pull my little journal out. I would write down Euro, USD, monthly potential swing high. Okay, and the reason I say that is because this arrow here indicates a potential swing high. This pattern is identifying a potential swing high. So I'm looking at on the monthly chart, I'm considering it to be a monthly swing high, and I'll write that level down right there at 24128. 1.24128. Alright, and if you wanted to, you could also take your little drawing tool and put a box there. Alright, now we'll go to the weekly. Now here we're on the weekly. Okay, and we see what pattern we got here. We can also right off the bat see that this is weekly resistance. This is a weekly support level. You can see that right off the bat. We can see how in the past 4 weeks, price has been rejected from this resistance level, which in my experience tells me that price is heading towards the support level. It's pretty much done doing whatever it was doing up here. The market's done playing this level. It's been up here 1, 2, 3, 4, 5 weeks. Your previous data is going to tell you a lot. You see, over the past 5 weeks, price has attempted to breach this level. But if you look at the close of this candle, it was here. Close of this candle, it was here. Close of this candle, it was here. Close of this candle, it tried again. Close of last week's candle, it was rejected. This week's candle should go ahead and finish the rejection. Okay, down here on the RSI, You can see what I said about when price is in the 80, 70 cent level and you have a potential new high, swing high. Those are your signals. So you see here, price was in the 80, 70 level, which is a sell. Confirmation number one. Confirmation number two, potential new swing high being rejected from level of resistance. Now, the reason you have to look at each time frame from the highest down is because each time frame is going to show you a different pattern. You want to get the long-term trend, that you want to get inside that trend, you want to get inside that trend, you want to get inside that trend until you can't get inside the trend no more, and you can pinpoint the most accurate entry ever. Trust me, I do it. Trust me when I tell you. As long as you take your time and you're not too, even still, sometimes I get too quick and I enter trades too quick. But if you can discipline yourself and you can be patient, what I'm teaching you, man, you can literally win every single trade you take. So now what I would write is on the weekly. I would say pretty much confirmed swing high at 1.24522. Also, you could put divergence. You can put divergence on RSI. And what divergence is whenever the RSI, this indicator down here, makes two higher peaks. As you see, this is a double top. If you look here, if you draw a line at these highs, you see how it shifted down. And if we go up top to these highs, it's pointed up. Okay? So what this would indicate is, as price is trying to push up, the momentum is falling down. This indicator down here is a momentum indicator. This measures momentum. So momentum is falling while price is still pushing up. Think of it as gravity, shit. Think of it just like damn gravity. You throw a ball up. It's going. Ball might still be flying in the air, but the momentum is falling. That means that ball's coming back down just as motherfucking hard as you threw it up there. That makes sense?
Yeah, great analogy. Yes, makes sense.
Okay, cool. So that's what divergence means. Divergence means when you have price forming higher highs, but the momentum forming lower highs. If it was dropping, it'd be basically flipped the other way around. Price would be forming lower lows, while the momentum down here is forming a higher low. So then, from from there, you just simply pop down to the day chart. Let's see if I saw anything I could view with Fibonacci on the weekly. Okay, and also doing this, you can also begin to start seeing when you'll be able to start seeing, once you get closer to your entry, you'll start seeing where you want to pull out your Fibonacci and get real technical. But for the most part, I just figure out the long-term trend direction, this where the market's going overall, and then when I get closer down into the real time right now, I pull out my Fibonacci when I want to start looking for a position to enter. Okay, so now we're gonna go down to the daily. I'm recording this too, so y'all will be able to play it back. Okay, so now here on the daily, based on everything we've drawn up, this blue box is the same blue box we drew on the monthly time frame. It doesn't disappear or go anywhere. So now that we're here on the daily time frame, we can clearly start to see our trend and our market move, paint a picture basically. If you look here, this is a clear as hell double top. If you know anything about trading, anything about basic patterns, this is a fucking double top all day with your eyes closed. Do you guys know, can you guys see that double top? You guys know what a double top pattern is?
Yeah.
Hold on, say that again.
Yeah, you can hear me?
Yeah, I can hear you. You said you do know the double top pattern. You can see that double top pattern right there, right?
Yeah.
Okay, cool. And notice how that double top pattern is in the exact same little swing high area that we identified here on the monthly. Alright, so there, now we see we have a double top. So what we can put on the daily, what we write down on our daily, is we could write on our journal, we write pretty much daily, confirmed double top. Confirmed double top pattern. Also, if you look here, we have divergence even clearer than we had on the weekly. We can see high on as far as price is concerned. We see a high, double top high. But if you look here, the momentum dropped drastically. See that? Momentum here dropped drastically, but price pushed to the same high it was before. So this right here is almost like that moment in when you throw that ball in the air and it paused in the air for a split second. Imagine that being this double top. It paused before it fell. That one little split second, it paused in the air before it falls. That's that second leg double top right there. And then we come down to the 4 hour. Now see here on the 4 hour, it's showing a triple top. This triple top here made up the double top on the daily, which makes up the swing high on the monthly. You see how each pattern's time frame adds up to the one above it, and if you start small, you can kind of break it down piece by piece. So we have a triple top right here. We zoom into where current price is, we see we have 4-hour resistance, 4-hour support. Excuse me. It's 323. Of course, as I said before, we always want to wait till those candles close to confirm the pattern. And the 4-hour candle closes at 159. So we have an hour and a half before this next 4-hour candle closes. But looking at this 4-hour, we can just see we can see how price bounced in here, and this level of support and resistance. Price broke this level of resistance, trended up, made a high, dropped, support, hit that high again, but did not break it, dropped, hit this low, which was the previous level of support, which we can clearly see here, hit this high again, came right back down, and now we're carrying back down. Now from here, as I stated before, I see us coming down here to this, back down here to this level of support, or even further. Now to get in our current entry, we would have been here on the 15-minute chart. I'll always take my entries on the 15-minute chart. Whenever I execute a trade, it's always going to be on the 15-minute chart. I'll use all the other time frames to pick my direction, pick my trend, but when it comes to entering, I want them same characteristics to show up on my 15-minute chart. Example, if you look down here, we have divergence. On the 15-minute chart, we have divergence. We have price after its up move stalling out, which means momentum is falling, and price will follow momentum. And that, my friend, is why I posted the sell on the Euro USD. Now, looking at it, let's look at the 4-hour chart. Go back to the 4-hour chart. Okay, now in the 4-hour chart, what I like to do also is I like to identify just like the most recent confirmed swing high and swing low. And looking at this chart, the most recent confirmed swing high and swing low is going to be this one, which is a swing low, this one, which is a swing high. Now, let's dabble with the Fibonacci. This is the 4-hour chart. Start with the 4-hour chart. If you can identify a most current swing high and swing low, pull your Fibonacci out. If you can't find the swing high and swing low on your 4-hour, work your way up. So 4-hour, daily, weekly, monthly. Try not to go below that. Alright, so I went from swing low to swing high, which gave me these Fibonacci points over here. 61.8, 50, 38, 23, 0, 100. Okay, now what these numbers indicate are potential levels of support and resistance, with 61.8 being the strongest, 50 being the I'd say medium, 38 being low. If it pulls all the way back to 100, the trend is the price 9 times out of 10, if it goes beyond the 100, price is going to the 161.8. Beyond there, 261.8. Now, I drew this, of course, on the 4-hour, the Fibonacci on the 4-hour, but it's not going to go anywhere. So when I go to the daily chart, this is how the Fibonacci looks. It gives me these points. We see prices at the 61.8 now where we just sold, because its next target is the 100. Based on how price broke these 23, 38, 50, and 61 levels, price is going to continue down. Remember what I told you? The 23, if it would have swing low to swing high and bounced off this 23, we would be in an uptrend. Okay, its next level of support would have been the 38. Next level, 50. Next level, 61. It broke the 61. Next level, 100. We'll see how we play out there. If we break that, 161. We'll see how we play out here. If we break that, 261. We'll see how we play out there. Then it'll be time to buy. But we'll pretty much reanalyze our trade each time it hits 100, 161, 261. So in a sense, if you wanted to even remove your Fibonacci just to get it out of the way, you could indicate these levels by just drawing a line on it. Alright, see now I removed the Fibonacci, but I still have my point of interest. So I come out here to the weekly, these are my points, which by no surprise to me, is one of my Fibonacci levels fall right on the weekly support. But anyway, that's what we have there. Does all that make sense?
Yeah, it makes sense.
Good deal. Good deal. Okay, what else did we trade? Oh, USD JPY. USD JPY, we took a trade on that too. Okay, you see I have my entries here. The reason my entries there is simply, like I told you, my entries are coming on the 15-minute chart, and we have a double bottom here. So that was a confirmed pattern for entry. We have a double bottom followed by diversion. This is a good indication of the complete opposite of the Euro USD. So you see we have these two lower lows, and then we have momentum rising. Momentum rising, price stalling out towards the bottom. Now that's the 15-minute chart. But how I got there was from the monthly down. Okay. Here on the monthly, we can see here on the monthly we can see resistance, support, high, low. Now, looking at it like this, deeper out, this low is lower than this low. Higher than this low. So just on first hand Forex 101, if you have a low that's higher than the previous low, you're looking for what? An uptrend. Just by nature, higher low equals uptrend. Okay. So with a uptrend bias, by looking at higher lows, in order to fully satisfy your directional bias to be in an uptrend, you would have to next have a higher high, which means this is one high. We need a higher high. Right? Correct? When we're looking for an uptrend is higher lows and higher highs. We have a higher low. Next, we need a higher high. Also, remember what I told you about the RSI. When we're trending, we're above 50 trending, this would be your sell area. When it dips below 50, coming back up would be where you buy. And it'll bounce up and down between 50, 70, 50, 70. And when it breaks all the way down through and starts trending below 50, we're in a downtrend. Downtrend, uptrend, downtrend, uptrend. But if we look here, we're downtrend. We broke through. Now we're in an uptrend. Downtrend. You look down here in the RSI. Downtrend. We broke through. Now we're on an uptrend. Clear as day. Now this is a monthly. Okay. Then we come in here and we can go to the weekly. Now we have a weekly. We have resistance, support. You can see that right off the bat. We have the trend line we drew on the monthly, still there. We have a low, high, then we can clearly see a range right in here. What do I mean by that? I mean, we can clearly see price is now trapped in a range here. Okay, now right here, although price has broken out this lower end of the range, in my opinion, based on my bias, based on the monthly being in an uptrend, the range looking as it looks with this small breakout here, I believe this candle is going to push us right back up in here to the range, which would confirm my bias of this just being a swing low. Swing low retest trap for the breakout traders. And what I mean by that is, I mean by in this range, there were traders that set pending orders, which would have said, which would, in their eyes, would have said that if price breaks this low, it's a sell-off. Okay, price did break this low, but the pattern you got when it broke that low is a reversal pattern, not a continuation pattern. What do I mean by that? This pattern here, if it did not have a wick, if it was flat, like this one, that would symbolize it would continue down. But with the wick being there, as it is, it would show me a trap. So what happened was essentially we broke down through the range, closed here. Now we're pushing back up into the range, and this is going to be our new swing low. And we'll continue back on our monthly ride, long-term uptrend. Then we come down here to our daily. Here we still have that trend line from the monthly. We have daily support, daily resistance. We have a double bottom pattern forming. We have a wick forming on that trend line. Also, we have price in the oversold position, ready to start gaining momentum back. Then we can go to the 4-hour. You can see a W pattern, Thursday. We can see a low, a high. We can see that this low right here is forming, and it's forming and appearing to be a higher low. So once you have a higher low, you're now looking for a higher high. So as you see, our target is to the upside. Now long-term target, we could even pull out our Fibonacci. Like I said, you can start to pull out your Fibonacci once you broke down the direction and things of that nature. Swing low, swing high. If you look here, swing low, swing high, price, boom. Remember what I told you about these levels, 23, 38, 50, 61, 61 being the last form of support. If you look here, price is actually bounced off support, off the 61.8. Now notice how the strategy that I showed you, that I've been showing you guys before I pulled this Fibonacci tool out, is confirmed by the Fibonacci, which means you don't necessarily, the Fibonacci tool and things of that nature are just for confirmation. They're not necessarily there for doing the work, because you can do the work with your eyeballs, and if you just know what you're looking for, pull out the Fibonacci to confirm things and verify. But if you look here, Fibonacci from swing low to swing high, we're bouncing right off that 61.8. To continue our uptrend. And from there, okay, so with that being said, we have our Fibonacci swing low, how to swing low confirmed. Now we can swing high to swing low and get the same thing another way. So now we have the 23, 38, 50, and the 61.8. Notice how the 61.8 is right at our projected ADR high. And I'm gonna go ahead and take a little break. Y'all got any questions? Let me know if y'all got any questions for me. I did call a trade on the Euro CHF too. Okay, monthly resistance, monthly support. I'm actually gonna probably take another trade on this particular. Now this is the Euro CHF. Here's the 15-minute chart. And looking at this 15-minute chart, can you guys see why I took my entry? Just tell me yes or no. I posted this trade in the group too, but let me know if you guys can see why I posted or I took this trade.
Hey, I'm sorry. What was the question again?
Oh, shit. I was asking, can you guys look at this Euro CHF chart and see why I look to put a seller?
Oh, okay, okay. I'm not sure. Does it have anything to do with um that lower high breaking the with the like the resistance line right there?
This
I'm
one
not
right here?
sure. Yeah, yeah, right there.
Yeah, I see a double top right here.
Okay.
And off the 4 hour chart, this is what we're looking at. Right here, we can see a high, low, lower high. We can already see this lower high there. So now pretty much at this point that I've entered my pretty much the trades that I've pretty much gonna enter for the day. What I'll do is I'll normally just sit back, hell, shit, play Madden, I stay up, but I'll occupy myself doing other things while the charts run its course. I keep my eye on them in case things don't go as planned, and I have to adjust and maybe take my trade in the other direction or whatnot, or I just stay out altogether, or I wait until later on. If I take a trade and I'm not seeing the results I want to, I exit the trade, clear the market. I'll still continue to occupy my time from then about 5 o'clock during the next 4 hour candle. The next 4 hour candles at 5. So I'll let these ride. If they don't go out, turn out how I perceive them as they should have, and then I'll occupy my time, come back to the charts about 5 o'clock, and reanalyze and shoot for it again. But a lot of the times I won't just sit there and just stare at the chart. I'm occupying my time doing something, but I try not to fall asleep. That's why I try to sleep, try to get my 8 hours and sleep in early. I hit the bed about 7, 8 o'clock Eastern on the weekdays. Like 8, 9 o'clock at the latest. Then I'll be up. And then I'll be chilling up to about 8, 9 o'clock, and then about 8, 9 o'clock I'm done. I can do whatever I want.
Cool, cool. I have a question. So part of your execution of this, this trade, when you say you set up everything, and you just let it ride. Is it like how do you come up with like the stop loss, that
Okay.
option?
Okay, now the stop losses, like say for instance, since I use my 15-minute chart for my entry, and since I entered here, I'll put my stop loss above, say right here, where you see my stop loss. Technically, I would put it above the most recent high that confirmed the pattern. Like say for instance, since this is a confirmed, what I'm perceiving this as is a double top, I put my stop loss above that because I know if this pattern is broke, then we're still going up.
Right,
So I'll
right.
cover
Gotcha.
myself to at least right there.
Cool, cool.
But that's my stop loss. Then my target comes on the other end of that structure, which means, what I mean by that is, since I'm perceiving this as a downtrend and it's a lower high, and I'm looking for a lower low, what I do is I put my take profit at the perceived destination that I see price going to. Of course, that's, take profit. But how I would get that is you could simply pull out the Fibonacci, and you see the swing low, the swing high, or the most current one. Take your chart Fibonacci and draw it, and then hit one of your targets. If we're in a downtrend as we see here, we're coming to at least the 100. So you could put a take, if depending on how many pips you're going for, you can put your take profit here, or you can hit your take profit at the next target, which is the 161 right here, or you see there's another 261 here. Just depends on how many pips you're going for. But to figure out and technically analyze your take profits with accuracy, strategically, you would want to hit one of your Fibonacci points. And if you look here, this Fibonacci right here at the 161.8 falls in line with what the automatic indicator calculation got as the perceived low of the day. So it's almost like a double, another confirmation based on indicators. But of course, you gotta use your tools, your educational tools, your personal knowledge with the indicators. You can't rely on the indicators alone.
Got you.
But that makes sense how I found the target?
Yes, to my knowledge, yes.
Right.
Well said. Thank you.
Smooth. Alright, if anybody sees anything or any currency they want to look at, let me know. I'm just gonna sit here and occupy my time a little bit. It's still recording and I'm still here. Just holler. Also, if you see here on the USD JPY, how price has hit this resistance level, that in my, if you just saw this trade disappear, what I did was I secured that back. You know what I'm saying? Now it doesn't hurt to hold your trade, but it doesn't ever hurt to secure the bag. Now, with that being said, since I did take that trade, since I took I closed that trade because it looks like price is going to retest and drop it back down a little bit here, sitting at this resistance. It may or may not, but I'm not in the market on this particular pair anymore, so I'm not losing or making any money. Most importantly, I'm not losing any. Make sense? Always secure the bag.
Yeah, it makes a lot of sense.
You know what I'm saying? Some might say, oh shit, I should have held it. Yeah, you could have held it, you could have made some more money, but what if that bitch would have turned around? You know what I'm saying? Now you lost money when you had the bag secured. All you had to do was close your trade. That'd be the difference between a winning trade and a losing trade. You know what I'm saying? You be up $700, turn around and be down 600 on the same motherfucking trade, and be like, damn.
It's that greed, huh?
Right? Be like, damn. 10 minutes ago I was up. Yo, ass should have secured the bag.
So you said that you just closed the trade, so that means you just took your you had your take profit.
I just took profit. I just took that profit and pretty much added it. I secured it, so it's no longer floating up or down. I pretty much just grabbed that.
Got you.
Mind you, I still got this trade in and this trade. So with that being said, knowing that I took this, I closed out of this, I more than likely will come back to this particular pair around 5 o'clock going into New York.
Oh, okay. The like when the next session starts for the volatility.
Yeah, when the next session starts.
Okay.
Because if you look here, this is a high. This was a previous high. So this could pretty much stall out for a minute. Or even dip back down into here. And at that time, I'll hop back in for the rest of the ride up. But you see, I'm not going to add another buy-in again. Although it still may go up, I'm not going to buy in again here. Because I see price coming back to at least here before it moves back up. If I buy in here, I'll be losing money the whole way down to here. When if I really wanted to be quick and not patient, I could put a pending order buy limit. So when price comes back down here, it automatically puts me back in the trade. Me, I personally don't like pending orders. So what I like to do, what I've always done is I've pretty much just timed the market out. I know if we're stalling by just off nature and experience, I know if we're stalling out now at 4 o'clock in the morning, the next move ain't gonna be till New York. On this particular currency pair, that doesn't mean the other pairs aren't moving. That just means with this currency pair stalling out right now at 4 o'clock in the morning, it's not going to make its next major move until the next session.
Makes a lot of sense.
So I'll I'll be looking to buy. I don't care, and you know it doesn't even really matter what goes on right now, because I know at some point in the session today, it's gonna come back to this point, and I'll buy then. If it doesn't, it doesn't. But if it does, I'm all over it.
So UJ gonna hit the stops again?
Huh?
Say UJ gonna hit the stops again?
Right. I think they're gonna hit the stops again.
All right.
When they come back and hit the stops again, that's when I'm going to play. And you know it'll be a lot smoother than being in the trade, watching it go negative and then go to positive, when you can just get in and watch that bitch go straight blue. It ain't nothing like hopping in a trade and seeing that motherfucker go, you know what I'm saying, go to the money immediately. You know what I mean? Like, and you know, some people be like, man, I'll be sitting there for hours. It's like, it depends on how you work your whole strategy out. You know what I'm saying? I know we don't have to sit here for the next 3 hours and wait for the move. I know the next move ain't gonna happen till at least 7, 8 o'clock in the morning. So we can go to sleep right now, set our alarm for 6:45, 7 o'clock, and still make the money. When somebody be sitting here from now till noon waiting on the shit, don't know when it's gonna happen. We know when it's gonna happen. All we gonna do is wait up, hop in, go back to bed. You know what I'm saying? Wake up, do our dance, and go ahead. That's what I've done. Cause like for the first 2 years, that's what I did. I watched every 24 hours of the market for like almost 11 months straight. Every single day, all 24 hours. I had shit to do. I ain't had no job, on probation. Fuck it. I was watching this motherfucking shit here. I ain't need a house.
Shit. Sound like you really ain't had no choice.
Right, I ain't really had no choice, so I was just like, hell, I might as well make the most of it. So I've got the timing element is the most important part, and got that shit in there, chokehold.
So look, on EU, you think it's gonna make that retracement hit the stops one more time? Just
hold
like
on,
UJ?
Hit the volume up. Hold on, say that again. Alright, I had to turn my volume up. Say that again.
I said on EU, you think it's gonna make the retracement again and hit the stops again, just like UJ?
Let's see. No. Considering the fact that's what all this noise in here did, I don't think so.
Alright.
I think EU is good to go for the ride.
Alright, bet.
And in this week, we're gonna use this MetaTrader 4, but next week we're gonna use TradingView. If y'all are familiar with TradingView, it's a different platform to read your charts. It's more like a Facebook for traders, where you can analyze and share your shit and all that type of stuff. I'll post a link in the Hangout, because you'll have to create an account, just a username and password.
So is this considered like part of a like price, I guess price action trading, like the strategy that that you use?
Yeah, because you always want to wait until the whatever time frame you're looking at. You always want to wait until that candle closes, because that way you'll get a better indication on where price was and where price ended during that time period.
So when we're looking at the like each candlestick, and I see like the shadows at the top and I see the shadows at the bottom, like what can that basically like tell the individual about what's going on? You know,
In that particular period, price traveled like in this, like you see this one with this long wick up.
right.
It pretty much says price open here. The buyers pushed the market all the way back up here in that hour.
Okay.
But then the sellers came in and closed that hour back where we started.
Mm.
In this particular candle, we opened here. The buyers are in play, and they're trying to push the market back up past here. Now, if they do that, we'll of course form another high, and we'll go. And that would be the that would indicate that they're going to hit the stop. If we breach this previous candle's high. But looking at this hour, what we can do to kind of figure out where we're going from there, you can look in here. Now it looks like that 15-minute candle possibly will. You see these big ass 15-minute candles in here. That's what indicates right here that this in here could be the stop point. But if they close back up here above this is where this arrow's at, they're gonna shoot up for probably 15 pips and then stop.
Okay. Cool.
And of course, 15 to 20 pips is the stop line. But only if they breach. They get rejected from here again, we're going straight down. I ain't gonna say straight down instantly, but throughout the day we're not going any further high. If they're rejected from this high one more time. Think of the market in threes. Everything happens in threes. There's three levels. A third rejection attempt is like the most dominant rejection.
Right. It's just like what you mean by like the I guess it give you confirmation or the like basically who's winning, I guess, the battle or the fight, like
tug of war. 3 strikes, you're out.
right.
Like you see right here, we're getting rejected again. If this is a successful rejection, it's lights out for the buyers. That's where stuff like your economic data and stuff like that will come into play. Because at that point you can then determine if the dollar is strong or if the euro is stronger right now. And you can kind of then factor in which way it's going at the high. Of course, if euro is stronger, it's going to push the dollar. It's going to push it up. The dollar's weak, it's going to pretty much get pushed up just off strength. And my stop loss is right above this level. Now in the group, when you get the signal, when I put the signals out, the signals don't necessarily mean hop in the trade immediately. Those are pretty much like zone coordinates. That's the difference between signals and I guess you would say, so to speak, trading live. Because when you take a signal, the stop loss is pretty much a safety net. But when you're trading live, you have more access to manage your trade.
Cool. So when you focus on like with every pair that you analyze from how you just showed us an example earlier with the you move from the monthly to the weekly and to the the 4 hour to the daily.
Daily
Or-
to 4 hour. Yeah, I break them. I do every pair the same way.
And that's to zone in and like get an acute entry point, or that's just as a whole, like just the whole position that you'll be doing.
Both. Yeah, it's for pretty much for both.
Okay.
Mm-hmm.
So when you say you might jump back in around 5 or 6 when when the New York Open, you don't have to do this because obviously you in real time, like you really don't have to jump back and do the same thing all over again and jump back in, right?
Right. I just would pretty much leave my charts as they is. Write down what I'm thinking now, and then when I come back at 7, just pick up where I left off.
Okay.
Or I kind of store it in my head, like pretty much. Whenever I look at the charts again around 7 or 8 o'clock, I'm looking to buy the USJPY. So just keep that stored in my head. So whenever I wake up in the morning, I know I'm looking to buy USDJPY. I'm looking to sell such and such and sell such and such. Either write it down or kind of store it in your head. Depends on how your memory is.
Got you. So so the exact what you telling me what you're doing is that can you say are you scalping? You know what I mean? Is that a form of, or you just know what you're doing?
What I did earlier, yeah, that was scalping. Just by being in a small entry, grabbing some pips and taking profit, that's a form of scalping.
Okay.
But what I aim to do is long term. I aim to hold my trades as long as they'll go. But
right.
But whenever you take profit early before you hit your target by definition, that's scalping.
Okay.
That scalp trade earlier, something serious, man.
Huh?
I said the scalp trade earlier was something serious.
Yeah.
You put out.
This
was in profit.
And you see this euro being rejected again, so that's a good sign as well.
Yeah.
And let's look at this USDJPY. See how it came back? It started to fall back down a little bit, and I took profit up here.
Right. Yeah, just like you said earlier, right? That zone, you said it was gonna fall. Yeah, you said it was gonna come down a little bit.
But now it's coming back. And I know by 7 or 8 o'clock, it'll probably be right in here. And that's when I'll be looking to buy again. And I know it might be, you might guys be like, how the fuck do I know that? It's just like, it's experience. You'll see it over time when you see the shit happen over and over and over again. It's just like, almost a fact price is coming back to right here at least. And the
So,
reason I say that is because if you look, this is yesterday's low. Yesterday's lowest point. Yesterday's low is here. That's why I say I believe it's at least going to fall back down to at least yesterday's low, and that's why I'm buying it.
so once it makes that retracement hit the stop, it'll be valid for the week.
Honestly, yeah. I honestly validate both of these for the week due to the fact that we've had we had 4 consecutive days of drop. We had last, what is this? Wednesday, Thursday, Friday, straight drop. Here we have Monday, and I believe we're gonna have Monday, Tuesday, Wednesday, and beyond. Just to keep the hit this. I believe we're gonna hit it. We're gonna hit this Fibonacci. I believe this week. Up here to the top side is 161.8. Can you see that?
Yeah.
I believe we'll dance up in there this week. And on the euro, I believe I just caught the high of the week on the euro, honestly. And the euro, yeah, I honestly want to say I just caught the high of the week on the euro for sure. And like no cap, no flex. But yeah, I see that shit coming down to at least right in here, if not lower. But you know, we'll see how the market play its little game. As long as it give me my money. But yeah, I like how these candles are being rejected so much from being pushed higher. And well, I just noticed this. If you look, this is yesterday's high. You know how I just pointed out yesterday's low on the euro, on the USD JPY. This is yesterday's high on the Euro USD. Excuse me. Anybody got any questions? Whew. Alright, so I'm gonna go ahead and wrap this session up. Hold those trades in. Share your results with me later on. I'm gonna export and upload this video so y'all can watch it later.